The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, folks. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon. And today, special day for me because I just was able to work out my schedule so that I could actually do Larry's show. Larry's away for a couple of weeks, and I can only do it one day at a time. I think that so far it looks like it's going to work out just fine for today, and I'm going to be here, so I'll be here for 2 hours. In this first hour, I'll just cover the usual stuff that I do. In the next hour, I want to go through, of course, tomorrow is more the commodities hour that Larry does, but I'm going to try to get to some of it today. And as I'm looking at this, there are a couple of things that strike me. I've been talking about for some time, and for my subscribers in my opening call, they know that on a purely technical basis, we had no choice but to go short. It's just what we always do at a D or an E in the Dow, based on the Chapman wave methodology. So we've been short for about a week and a half. That's working out so far. Now it's working out quite nicely. And we then added the S&P as a short. So the positions are, in my opening call, that the longer-term positions I was wanting to hold are under pressure, so we took a little profit now in one of them. I still like the stock looking out, but I've got a feeling that there's more going on here than we can actually tell from the surface because, as I said yesterday a number of times, the market... People say the market hates indecision, and I say, oh, come on. Every single day the market handles indecision. What the market can't stand is indecision about indecision. And right now there are a couple of things that are looming that are potential stalling factors. I'm not going to call them bearish factors. I'm just going to call them stalling factors. Two are totally unknown. We do not know exactly when the tapering is going to take place, but we know that the Fed is going to attempt to do that. They're not going to make a mistake by doing it too early. I think they would rather be late than early. It turns out in the very long term, whatever they do, I suspect is going to create tremendous uncertainty in the market at some point. That's not now. Now we've got the uncertainty of when everything's going right, when even the trade deficit comes roaring back, when even the, I must just check this out now. I was told about this a long time ago. I'm going to go there right now while we're talking, because if I don't, you know that I'll forget. I have a certain immediacy about what I do, and so be it. So here we go. I just want to check out Barron's Confidence Index, the most recent, and that says, yes, peak A, peak B. I'm not able to tell if that's higher or lower. Let me just see. Oh, I can't. I think that's C. Peak D. A little peak D. Yeah, I think this is a peak D in the Barron's Confidence Index. Going to be watching that real closely. It's had a nice run, but it's not at the highs of 2011, so I'm going to be watching that. Okay, so I needed just to do that. That's done, so let's get out of that. Okay, what I'm looking at now, and I think this is going to be very interesting, just to make it as succinct as possible. I'm going to go to what my subscribers get. This is just these are the charts that I show every day. This is just one tiny little bit, that little rectangle with those 1, 2, 3, 4, 5, 6, 7, 8, 9 or 10 lines. There's nothing, because I still add to that about another 3 or 4 lines underneath that every day. But this basically sums up what I'm looking at, why I'm looking at it, what it is, and this is purely based on the Chapman wave methodology. And I'd spoken about, I'm sure some people are not going to copy it, but that's just the way it is in my work. You'll notice that there are certain techniques that I've used for the 10 or 11 years that I've been here. Many of them in the very beginning were decried by a lot of people as just not necessary or unimportant, and slowly over a period of time you found out that they're actually very important. In fact, that's why I talk about my Sears and Roebuck huge toolbox, a toolbox that says you need, on the day that you need the Phillips screwdriver, you need the Phillips screwdriver, even if you haven't used it for a year. The plumb line, the washer for the garden hose, just whatever it is, or the falling axe, or whatever it is. And in this particular instance, what I've done is I've shown on this particular chart all these techniques. These are techniques that I discuss in great detail right here, slide 32. Right in the very beginning of my introducing the Chapman wave methodology in the section 1. And what I show is how the MACD and the stochastic work. This happens to be the S&P back at 1210. That was in 2005, July the 5th of 2005. Isn't that interesting, right? And right now we're at 1688. Interesting. And I show how the MACD and stochastic work. I show with these the circle and the rectangle, what you're supposed to look for, how you use it, what the parameters are, etc. Well, that's all the application right here. Look, fading MACD at a peak F in the Dow. Peak F is the one that is the most dangerous. The monthly chart back in October of 2007 gave that peak F top, which turned into a major sell signal, went to a sell mode in January the following year. So, look, the stochastic was fading. That says you've got to be real careful. But within this, I have two patterns. Oops, I took one away. Oh, it's in the other one. It's in my other chart. There's an oval pattern. If you don't mind, I'm just going to flip this over for a second here, because here there's AZO, one of the stocks I was looking at today as being a potential short. There's still time. I'm not sure at peak E at 452. We want to actually short a stock in the 400s. They're much better stocks, lower price, that have the same percentage gains, but we might do an option. Who knows? So this is what I'm looking at. INDU. There it is. So you see the vertical lines at 15,604 at peak E. The MACD and stochastic were very strong. At peak F, just 5 days ago, at 15,658, they were falling. That's the right shoulder failure pattern. And that says be careful. It doesn't say, hey, make your sell signal. It just says, next step. I go step by step. Next step, be careful. Now, I move the oval away because that oval has to do with a stalk leg formation. Chapman wave stalk leg formation. I'm not going to get into that at all right now. We need to see for another couple of days if the 15,405, actually 15,405 level, it holds. If it's taken out, then the diamond formation becomes really important. If it holds, the oval formation becomes really important, and that is the pattern that I call Chapman wave stalk leg formation. We'll talk about that if it happens to become a viable commodity that we will use. The weekly chart looks to me like it's going to make a peak E top here with the MACD still very strong. The stochastic still very strong. MACD possibly deflecting lower. MACD is more important for the major tide. Leg D up in the monthly chart. So let me run the numbers. Well, where are the numbers? Okay, the numbers are right here. The Dow is down 65 at 15,453, having made a low today of 15,516. Underneath the 9-period moving average of 15,538. The S&P, I'll just, actually, you know what, I'll do the charts at the same time. SPX.X, there it is. The S&P, I didn't update this one, has made a potential peak F top, and I'm putting in a down arrow. Down arrow at 1709. The exact number is 1709.67. I'll type that in. 1709.67, and underneath the 9-period moving average. This time it's different to the Dow. This is the first time it's under the 9 EMA decisively. Yesterday just snuck a tad underneath. Now I'm going to talk about some of the technical indicators that I'm using here. If you look at the on-balance volume, it went to peak A, peak B, peak C, peak D, and then it went to an E and an F, coinciding exactly with the peak F in the S&P. That says to me, hey, you might be wrong, but there's a real good chance that this could be a more serious top than any of the others. So take it to heart. Don't get carried away on the long side. Rather be looking to the short side. Okay. So now the comp index, and if you don't mind, I'm just going to go to the Qs because the QQQ, who trades the comp index? We all look at the Qs or the futures, NDX 100 futures. Well, this is an alternate wave count. I'm not very happy with having this particular one, but it works. There's a chance that this isn't peak C, but a peak F because of the stochastic and the MACD having a slight variance with a much higher price movement to 77.08. And at 77.08, I just have to be very careful here. I have to say, hey, wait a minute, whoa. This has the potential to pull back, but there's actually tremendous support all the way into the 75s. So the Qs are still showing relative strength. If I look at the IWM, the IWM is at 103.88, down 69 cents. And it made 105.63 top 3 days ago. This, to me, is absolutely a peak F. And that says take this seriously. That's the daily. In the weekly chart, it is leg E. I don't yet. Technicals at 95%. The stochastics at 95%. The MACD is still very good. All I can say is 101.84 is the major support. And if that support gets broken, then we have a sell signal in the weekly, by which time there will be a sell mode in the daily. Monthly chart, I have nothing. It is in a strong leg E. I'm treating it as a strong leg E. I don't want to even get to the monthly yet. The monthly is only 5 days, 6 days old. So there's nothing there to talk about. Now we go to something very interesting. At GC.P. At GC. Gold contract, trying to make a little bottom here, and what's very important is the low, that doji candle low that was made this morning at 6 o'clock at 121.80. This is on the continuous contract, has a very nice turnaround both in the stochastic and the MACD. It is going to be more than a bounce if by Friday afternoon gold closes at 310 or higher. I'm making it real simple. If for any reason over the next 2 days the gold contract goes below today's low, that's going to be pretty negative. And let's make it as simple as that. Numbers on the gold contract. This is the this is the continuous contract trading at 1271.60. How close is that to the actual futures? GCQ13. 1284. Now, of course, I can't even remember what the other one. 1284. Yeah, 1284. They're about the same number. Watch that closely. A close underneath today's low of 1271.80 is very negative. Let's go to the dollar as we go to the break. First break, 877-927-6648. Love to take, of course, a lower low in the dollar. And I want to look at the euro. Is that going to make that leg D? Yes.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman, Tiger Technicians Hour, and we've got some callers online, so let's just jump right away to Mike in Long Island. Hi, Mike. How are you?
DSW. Can you have a look at that?
Okay, now DSW, that's the shoe company, right? The shoe, it's not a warehouse, but it's a shoe something or other, right?
Yeah, a shoe retailer. You once had it in the opening call.
Yes, okay. So let me just check 84. I just want to quickly get this in here because I used to have this notated, and I'm getting a little used to this disappearing, so give me 1 second. So 84.77, 31.32, and that's there. Okay, and there you go. Okay, so I'm clear now. That goes to a B. That goes to a C. I'm just updating the chart. Takes me just moments. And we've got an A to, an A to B. So we're looking at, right here. We're looking at DSW, which is trading at 79.64, down $1.61. And I am close to finishing my notation on the weekly. And that's going to be an A, a B, a C, and leg D. Wow, amazing how that works. Oops, excuse me. Okay, so now we're ready to do it in the weekly chart. I just want to have a quick look at the daily chart. A monthly chart is just been walking the 9-period exponential moving average. It hit an all-time high yesterday. I couldn't tell you the number of stocks. This is what's made me really nervous. about what's going on in the general market. I couldn't tell you how many stocks have either made round numbers, dojis, or silent dojis, the Chapman Wave silent dojis at the most recent highs. That's number one. Number two is I couldn't tell you how many stocks have gapped up to leg D in their, let me just finish this, in their daily charts on news of earnings, good earnings. It's great that they gap, and it's great that they're up, but I don't like to see them gap up when that gap is on a leg D or E. So I'm a little cautious here. So this is an A to a B. This is going to be an E/C. And now what do I look for? I always look for round numbers. Let's see if there was a round number yesterday. 82.26 was the high. Now, you have no position on this. You're looking at it and saying, perhaps it's a little toppy. What to do? Is that correct?
Correct.
Okay. So let's do this. Get this, just the arrows. I need to have the arrows because it's always easier for people to see. It's made a U formation. So here are the formations that we would look at. It's made a cup formation, and it broke out in the Chapman Wave. That is called a cup and ladle formation, and it usually goes to a D, at least a D. But the pullback is very important because on the way to the D, if at any point it breaks and goes underneath the left side lip, this would be the 79.60 high of the 11th of July. And today it went to 70. So far, it's right at 79.59. The low is at 79.63. So that is, in fact, under the 78.66. So 79. Let me just double check. Yeah, 79.60 high. Okay, let me keep that in mind. That's number one. Number two, D in the weekly. And if you don't mind, I'm just going to take a moment here. It always takes me just a moment to do. I want to do it. I want to see where we are in the monthly chart because there's nothing wrong. Technically, it's essentially, it's just a great example of a stock that's basically walked the 9-period exponential moving average, and it's done that without any real hesitation other than maybe a 1-month pullback, and then it just goes right on to its business. So let's call that, I'm going to double check if this is a high. 55.06, 55 round number. Okay, great. That's what I wanted to see. So that's an A, that's a B, that's a C, that's probably a D. I'm almost sure it's a D. I'm getting real good at seeing the white background charts. I used to be very good at the black background charts. Take me a little bit of time to get visually used to peaks and troughs. There we go. Leg E in the monthly. DSW Inc. trading at 79.63, having just yesterday made a high of, I just wrote it down, right, of 82.26. The weekly chart is in leg D. MACD is very good. Stochastic's pulling back from the 90s to the 85 area, 85%. That's still very good. It's the daily chart that has me a little concerned. Here's my recommendation. Why? Because I am now negative the market. I believe that the tide is changing. It hasn't fully changed. I have to wait for the close today to get my sell signal, which I think almost immediately will go to a sell mode in the daily. I'm going to suggest something. I'm going to suggest that you take a short position, but let me give you numbers and what to watch for as soon as we get back. We've got Mike in Long Island. We've got Dale in the Cayman Islands. I won't keep you waiting, Dale. I'll be there very soon. And Rich in Tampa. Be right back. Dow's down 81, S&P's down 10.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians Hour, and this is what I'm looking at. I'm on with Mike from Long Island. We're looking at DSW. Mike always comes up with great suggestions, and this is one of them. The DSW is, in fact, a shoe retailer. I don't know if they're a wholesaler, but they've got I haven't been for a while, but whenever I go, I'm just impressed at the array. I love the quality. I never buy anything there, but that's not the point. Then again, I don't buy anything in many places. Meantime, back at the ranch, what we're looking at is in the monthly chart, it's basically walk the 9-period exponential moving average, and technically, there's just one sign. Well, there are 2 signs that are saying, be careful at this particular point. We don't have a signal, but the signal is close to turning, and it's close to turning down. But in fact, a beautiful narrow, I'll never forget when Merck, it was either Merck, I think it was Merck or Pfizer, did this years ago, back in the 80s. I looked at this channel, and I couldn't believe how long the narrow channel stayed in this uptrend. I called it the worm formation. And what I'm looking at here is that it's done the same thing, and it's bumping into, I'm going to make this red just for now, the resistance zone that's always been at either a D or an E. And we went to the E. So I'm suggesting on a small position that you take a short right here at the low of the day of 79.56. Now, if you take it at 79.56, I don't think a 3-point stop. I'd give it even a little bit of room, not 82.26, but about 82.55. So a small position with about a 5% risk on that small position, and then I would add to it later on, if it started to break, I suspect there's still enough strength in this that there'll be a number of rebounds, but I'm expecting that if I'm correct, that this in fact is a peak E, a rogue wave spike to the upside, because the stochastics and everything were pointing down. So this fits exactly the technique that I call the rogue wave. I don't want to go there now to my CD introducing the Chapman wave methodology, but it's a sudden spike up, and the very next bar has to take out the low, and then the following bar has to be even uglier. And that's really what we're looking at. Otherwise, it's going to have the pattern that I call the inside buy mode that says you could, in fact, get a brand new in the 120-minute chart, another peak A, B, C, D, taking a little bit of time to get to just below or just above the high, in this case of 82.26. But either way, I think this is just a perfect time. The whole category, apparel, etc., the RTH, I think, is starting to show weakness for the very first time. Yep, I've got a peak F top. If this is a low today, in the daily chart, looks to me like it's pulling back. Monthly chart is still good, but it's bumping up against resistance, and weekly is at F/B. So I'm just putting it into that whole category, and I'm going to say start a small position here, and as if it starts to pull back, and if DSW starts to break at the 9-period moving support is at 79.66 right now. If it takes that out, there's a really good chance that if it gets anywhere into the 78.94 area, that any bounce is going to fail, and it'll make lower lows, and it'll start going back to 76.04, which is my short-term target for this, the 200-period moving average in the 120-minute chart. Hope that helps you, Mike.
Yes, Basil. Also, before the show's over, can you identify on the Q dailies when you're going to make it an F, an F, or still in a C?
Okay, absolutely. You know what I'll do? As we're signing off right now, I can tell you it's at 76.04. If it trades at 75.57, that's an F. Let's make it as simple as that. Thank you for calling. I always appreciate it. Let's go to, we got Dale in the Cayman Islands. Hi, Dale. How are you?
Very good. How are you doing, Basil?
I'm doing very well. Thank you. So I have a quick question, if you don't mind. Before you ask me the question, do you live in the Cayman Islands, or are you visiting?
No, live here.
You do? Okay, because it's supposed to be very beautiful. I know that Tom used to go there very often. I don't know if he's been there lately, and he used to talk about it. He showed us some pictures of it. He had his favorite tree, and it's also near where my daughter was for about the 9th time in Haiti up until this past Saturday. And so you're right in that area. It must be very beautiful, but it also must get those terrible storms, huh?
Yeah, it is. It's a little bit, that's right, Hurricane Alley, although it's been good the last 3 years. So
good. Well, I hope it stays that way. You'd like to look at?
LinkedIn, if I could, LMKD.
Do you have a position?
Yeah, I have a position from much lower, and I was possibly looking for an ad here. I know there's market weakness, so I wouldn't mind, I don't mind waiting, but I was wondering just your opinion and the parameters that you would look at for an add-on.
This is the very first time in LinkedIn that I'm looking at it and I'm saying, if this was a stock that you had bought, say, grandchild, in other words, this was a legacy stock. I should say, this is the kind of stock that I would look at as a legacy stock. As years and years and years ago, people would buy Exxon or General Motors years ago. Those stocks that you actually handed down in the family, or an AT&T, as Tom often talks about, that his mother used to work there and he's still got the certificates. I would put this with Facebook, I would put this in the legacy category. Google, LinkedIn, Facebook, as part of a new generation of speculative, we still have to call them speculative because they have no real 20, 30-year history, but this is the category that I put it in. That's one thing. So if you bought it much lower down, my suggestion is going to be, this has been one of the leaders. Now, I have to show you something that's really important. For the very first time, I'd spoken about this, I think I had a call last week, and my recommendation was to raise the stop on a core position. No, to keep the core position, to either raise the stop on the big spike that we had on the earnings, or maybe to take something off, because to reward yourself both for a fabulous position play as well as saying money management says, if I was to use the weekly, I don't know if you can see Tiger TV right now, but if you can see that, or if you can see it, look at the chart that is so important right now. Can you see that trend line that I'm showing? That trend line in the weekly chart uses a technique that I use a lot, and that shows it's two parallel lines. I call it the inside track. I don't know if you ever got my CD introducing the Chapman Wave methodology. Spent a lot of time talking about it. It's called the repellent zone. I used to call it the sell zone. I now call it the sell/repellent zone. Why? Because if it's, and I usually make this green the top line now. For a long time I've been making the top line green, because if it powers above that, that's really positive. If LinkedIn, which is trading at 229.09 down 268, goes above 237.96 was the high. If it goes into the 240s, that's really powerful. If it goes underneath the red line, which it is right now in the weekly chart, it says, whoa, be a little careful. Stochastics at 93%. That's great. The MACD is good. I'm inclined, as opposed to almost any other stock I'd be looking at right now, I'm inclined to say to you, all you need to do is one part of your position. I wouldn't do anything right now. It's holding so well. But I think if it closes under 220, I would take a little bit off. Actually, I'm going to do something a little differently. I'm going to say to you, I don't know what your position is, and I don't know what the overall spectrum of your portfolio, including whatever else you own. I'm waving my hands here, whatever it is. But there's nothing technically wrong, and it's actually doing that thing that I was just talking to Mike about. It is, in fact, has an opportunity, if there's any strength whatsoever, it could make another little pattern that tries to retest the highs. But here's my thinking. Everything about it says market-wise, it could drag down with the market. So I'm going to suggest either at 228 or lower, I would just take a little bit off. I'll tell you why. If it breaks to 227, I think that there's more likelihood that this is going to be a top that could turn into a little island reversal if tomorrow it suddenly gaps down. And that's going to say it's going to have a tough time making a new high, but don't change your core position one iota. But what I would recommend, take a little bit off now, or at 227.50, and allowing it maybe by tomorrow to try for 231, which will say, watch out, I can have a little bit of another move like a U-shaped pattern to retest the highs that I just made. I'm ignoring the market right now. After all, it's down 1%. The general market's down 0.50 and 0.62, but 1% at minus 247 on a $229 stock is nothing. So I'm inclined in this area to say to you, take a little bit off and try to plan to put that back on. Give it some crazy numbers. Say if it fills the gap towards 214 to 210, I'll put this back, or at that point I'll think about putting that little bit back. But don't change your core position.
Okay.
So I hope that helps you. And I'll make it one more suggestion. If you can, call me Friday or Monday. Let's look at it again and see how it's performing. Because so far it's the weekly chart that says to me, bumping up against that resistance, you got to respect it. And leg D in the monthly chart, I've got to respect D's where you can have a bit of a pullback. I would like you to see you reward yourself for such a great position play, and take a little bit off just to reward yourself. Where you do it within a couple of points or something like that, it's your prerogative to do that. My 120-minute chart says it's holding well, but there's a pretty good chance it's going to test the 224 area at some point fairly soon. So that's what I'm recommending. Hey, congratulations. You've got a lovely trade. And I hope that we're looking at this and you call me in a year's time and you say, thank goodness I kept this because it's now trading at 400.
Thanks.
Thank you so much.
If you have time in your show or the next show, could you also look at Facebook? I don't have a position.
I will. Okay, I'll do that in the next show. I think we've got a lot of calls. Okay, I'll do that in the next show, in Larry's show. Thanks for calling. Call again. This is Dan in Cayman Island. Let's go to Rich in Tampa. Hi, Rich. How are you doing?
I'm doing fine, Basil.
Good. So you wanted to look at AUD?
Yes, sir.
It is the Aussie dollar. Do you do it through the AUD or do you do it through the currency pairs, the AUD, USD?
I do it through the AUD.
Have you traded the AUD before?
Yes. I've actually shorted it from 103, and I got out at 90, and I've left it alone since it bottomed recently, and I don't know if this is actually just a little dead cat bounce or on its way back down to 85.
What? Rich, I'm going to ask you a special favor. I'm going to talk about it, and then I would like to spend a little time in Larry's show to talk in the next hour to talk about this a little more, and I'm going to talk about it because when you shorted it, you might have been the only trade of the day. You got to book an appointment to get the stock because yesterday it only had 765 shares traded altogether. AUD is the PIMCO Australia Bond Index ETF. So all I can say is right at this particular moment, I'd be a little hesitant to do anything. It's got an H pattern that's gone to an M pattern. It's so far successful. It has a chance to go higher to over 91. It's at 89.50. Mm-hmm. If I do this, I'm going to let me pull this up. I want to just show to show the audience something. AUD. I'm showing them
the future contract as well.
Okay, because the time in sales, it hasn't had a trade today. The last trade was yesterday at 4 o'clock. 200 shares at 89.50. Yeah. So it's not very accurate. But if you look at what it's being asked, the bid and ask is 88.12 to 89.50. That's $1.40.
I'm really more concerned about the futures contract at the moment.
Okay, so that would be, is that AU 13 or something like that?
Yes, sir. The AU 13.
AU 13. Oh boy, I'm not getting it. AU DU. I wonder if I can. No, I'm having trouble. Okay, I know how to get it. AU. I got it. Oh, I haven't got it. If I do the AUD USD currency pair, would that be similar?
Yeah, it's
in
right
chart. Great. Okay, that's exactly what I wanted to do. I actually looked at this last night because my brother lives in Sydney, Australia, so I always look at this and check it out. Now, the AUD has started to move up. If I go to the AUD-USD currency pair, and this is in the Forex market, I've got it. It made a peak D in the 120-minute pullback. Then there was something I heard, Daryl Martin. Folks, if you ever want to know about all these different news reports that come out, listen to Daryl Martin. He has a way of just nailing these things. So they had some kind of report that came out, something to do with the bonds, I think, and there was a big spike last night, and it went from, this is a big spike, folks, in currencies, when you go from 0.891 to where the high is today, 0.902, that's big. I'm going to make the suggestion that if you want, you can nibble on the futures right here. And when I say nibble, I really mean if you were going to buy, say, 3 contracts or 5, I would only start with a very small amount of that. And what I would do is I'd start on that contract, and then I would have a stop halfway into the wick of 0.8957. Why? Because I love the action right now, but it needs a lot more work. And you know what? Are you able to listen to the next hour?
Yes, sir.
So then let me spend some time on this, because there's a little bit of work that I didn't finish doing, and I'd like to do that. So I'll call again in the next hour.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern. on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Folks, just in the Dan question about FIVE, I will do that in the next hour. I would not rush into this, so we can do that. It's plenty of time for it. Now, we've got Rich in Tampa just signed off with AUD, and we've got Robert in Chicago. Hi, Robert. How are you? Robert, you there? Robert. Oops, I missed Robert. I think it was yesterday when I did Tom's show. Was it yesterday? Day before. Yesterday, whatever it is. I missed him. And now, Robert, you're not there. You wanted to look at WFM. So I know that sometimes we get a cutoff there. But give me a yell. So as soon as I'm going to talk about WFM. It's made a peak D at 56.83.
Hey, Basil. How are you?
Hi. How are you doing?
Oh, great, Basil. I'm calling you about Whole Foods Market, and it made it through earnings, and I was wondering what you think about it now.
Okay, so Whole Foods Market, now you've had this as a core position, so it's really what we're looking at is what would you do in the shorter term if there was some negative activity that I was looking at, because the core, if you're down, I bought it from way back, at this point I still keep the core position. But I'm going to make the suggestion that the arch formation that's forming, because it hasn't so far broken out of this pattern I call the falling axe, it hasn't broken. Well, it did try. It went to 56.60 on the 1st of August, but then it pulled right back, and it's still struggling. It's showing some strength, but the technicals are already weak in the daily. The weekly technicals, I'm still calling this a peak B, which says, yeah, it could pull back somewhere from 54 where it is right now, 55 where it is right now. If it takes out 54, it's going to go down to the 52, between 52 and 51. I might have to reassess what the weekly is. And my only suggestion here is, so you have a core position, right?
That's correct.
I think it's appropriate, because of the market struggling at this particular point, to at least take something off. And this is the way I would do it. You keep your core position, because if it rallies, it could go from 55 to about the 57s, pull back, and then go to 58, 59. Well, I would not ignore a 10% move to the upside. But I think that if you've got your core position, that's fine. My big thing is that it's a little bit vulnerable here. So here's my thinking. At 55.40, it makes no difference if it's 1 point. But if it pulls back to 54.70, I'm going to suggest you take something off, and that you plan to put back sometime towards the 52 area. It might even be a little lower. And if you miss putting it back, that's okay, because you've just rewarded yourself. You've taken something off, but you've kept your core position. Why do I say keep the core position, even though it could be a peak F that's forming in the monthly chart, is because I need to see how it plays out in the weekly, because I don't yet have a sign in the weekly to say, hey, get out of the stock, because it could just go sideways, have a sideways consolidation. So that's my recommendation. You could do it right now at 55.44, or you could say, hey, if it's going to pull back a point, it could also bounce a point. And if it bounces a point and breaks above yesterday's high of 56.13, I recommend you take the stop that we just had at 54.70, and you turn that stop into 55.70, like a 1 point or 1 1/4 point trading stop. But so far, that's the only thing I can say is take something off, because I think it will become market vulnerable rather than just Whole Foods vulnerable. So that's my recommendation. I think you've got a fabulous trade and a position, but I don't want to change that position. As a trade, if you said to me right now, would you short it or would you go long? I say my inclination would be more towards a quick short to the downside. But that's all. So take something off anywhere around here, or raise it as a trading stop, but I would think of taking something off in Whole Foods at this particular point. Hope that helps you, and congratulations on your great position. And Freeman on OCR, I'm going to do it in the next session if you're able to listen. I know you couldn't hold on. It's in leg E in the daily, and it's in E in the weekly, and E in the monthly. I'll be right back with Larry's show. Hold on, I'll be back.
Profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing, and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.